As a beginner investor, you may be overwhelmed with the sheer amount of information that's out there available in terms of how it is that you can make some really good investments and the different kinds of investments that you can make so that your money that you've accumulated through hard work can grow over time and so that your wealth can increase without you constantly having to work for every penny that you have. In this video, I'm going to show you the different kinds of assets that you can invest in, as well as the most important things that you need to know about them so that you make some good investment decisions. And just so that you know that I'm not BSing you, my name is Guillermo and I've worked in the financial industry for a very long time, working at one of Canada's largest real estate investment trusts. I actually started my investing journey very early at the age of 16, and it's something that I haven't looked back ever since, and something that, as you can tell, I'm really passionate about teaching to other people. Okay, so the first way for you to invest your money as a beginner is stocks. And stocks are generally a great investment, obviously depending on how you do it, because what happens is that you get part ownership in a big major company. So that allows you to capitalize on the growth of that company over time and generate returns for your money without you having to actually do a lot of work. Now, the downside of investing in stocks is that in order to do it successfully, you need to know what you're doing. And this is something that can take some time for you to learn. However, what you do need to know is that there's generally two main strategies that are followed for successful trading over the long term. And this is technical analysis. And then on the other hand, we have fundamental analysis. When it comes to technical analysis, be very careful because there's a lot of courses and a lot of people out there that are teaching these trading strategies. And the problem is that these people, in many cases, they do not have a long enough track record for you to be able to see whether or not the strategies work for the long term. So what happens is that a lot of people make different investments and they may work for maybe a week, they may work for maybe a month. Next thing you know, they don't work and they lose a lot of money. So be very careful to only learn those types of strategies and techniques from people that have an actual history on the field and who have been successful over a very long period of time. On the other hand, you have fundamental analysis, and this is basically where you analyze companies and you look to buy companies that are selling for a low price so that eventually they grow and you sell them for a higher price. This strategy has been proven to work really well over the long term. I mean, you can look at so many investors that have created wealth in this way. The main thing that you do need to know is that in order to be successful with this strategy, you really know what you're doing, really do your research, and constantly adapt to what's happening in the market so that you can be successful over the long term. The next way that you can invest your money is through bonds. Bonds are generally safer than stocks, and the reason why is because basically what you do when you get a bond is you're essentially a lender of a big company that has to be qualified enough for that to happen in the first place. So what that means is that for you as an investor, you get a check in terms of interest payments that the company is making to the bondholders, and then you're essentially building wealth and building income that way. The downside, of course, is that your returns usually when you invest in bonds are lower than if you invest into some of the other assets that we're going to talk about, like stocks. The key to being a successful bond investor, as you will learn, is to really understand the relationship between interest rates and the price of the bonds, and to make sure that you invest in bonds that are safe in terms of companies that are really solid financially, so that way you don't have the possibility of losing the investment that you make. The next investment on the list is mutual funds or ETFs. So the great thing about mutual funds and ETFs is that rather than you investing in individual stocks, what you can do is invest in one of these funds, and essentially you get access to an investment that includes a lot of different stocks in a particular category or a particular kind of company. So the great thing about this is that you don't necessarily have to do a lot of research, and you can just pick a really good fund and you get to capitalize on the growth that happens over time for companies. So for example, let's say that you invest in the S&P 500. These are the largest 500 public companies in in America. And what happens is that as these companies continue to grow because of the demand and many different economic factors, the stock prices also go up in general. And so what happens is that the fund that you've invested also increases in value over time. And so this makes it so that you don't have to do a lot of research in order to capitalize on that growth, and therefore it creates a really good investment opportunity for you to constantly do without having to do a lot of research. There's been so many different studies that talk about what it takes to be a successful fund investor, and the summary of those studies is this. One of the most important things is that you do need to stay consistent. So if you want your wealth to grow over time, what you need to do is be consistent and invest a set amount every week, maybe every month, whenever you think it's feasible, depending on your financial circumstances, and that you invest a set amount over time, so that way that money continues to grow, and take advantage of the magic that is compounding. And the other thing is that the fund itself that you invest has to have a good track record and a low expense ratio, because if you invest in these funds have expenses that need to be paid for. And so if the expense ratio is lower, that means you're gonna get to keep more of the returns of the fund itself, and your money is gonna go further. Of course, the fund or the ETF itself really matters. So if you're a beginner right now, I would only invest in the major funds, which are like the S&P 500 and overall the world index. So the tickers that you can check out for this are VTI and VU or SPY. The next type of investment that you can make is real estate. Real estate is one of my favorite investments, and as you saw from before, I come from a real estate background in terms of financial analysis, so it's something I really enjoy. But what I like about it for investors is that you get to invest in something real, a real property, a real piece of land that you can see, touch, and feel, and so something that can also generate income for you. So that is one of the best things about real estate, and also the fact that there's only so much real estate in the world, so that automatically creates growth, but also it depends on many different factors, but something very important to consider. Now, the main downside of real estate is that real estate, it's expensive, so you really need to build your capital so that you can invest in some good real estate deals. What you can do in this case is try to make as much income as you can, save that income, and then make your real estate investments. Something, of course, that you can always do is partner up with a whole bunch of people that you trust, or you can invest in a REIT, a real estate investment trust, which is a company dedicated to make real estate investments. That's another route, and this essentially allows you to still be invested into real estate even without having to invest that much capital up front. The last type of investment that you can make is commodities. Commodities includes investing in things like gold and silver and precious metals and those kinds of things. And the great thing about investing in commodities is the fact that, similar to real estate, there's only so much gold, there's only so much silver that's available in the world and that can be mined. So therefore, that's automatically going to help in terms of growing over time, because there's only so much of it and the demand is constantly rising for it. So that's what makes it a great investment. And the other thing is that it is a really good hedge in terms of like when things are going bad economically, the value of those commodities tend to go up, and so it really helps with that. So it's an asset class that I recommend that you get into, and something that I would allocate a specific, maybe a small part of your portfolio, but something that you have in there that's going to help to improve the performance of your portfolio in down times. So there you go. Those are the different kinds of investments that you can make and that I recommend as a beginner. And the last thing that I want to leave you with is, if you could share this video with a friend, that would be super helpful, so that way this content reaches more people and we can help them make the right investment decisions for their particular financial situation. Thank you so much. I'll see you in the next one.